Natural gas prices are expected to remain moderate throughout the late 2024 and early 2025. Current prices are constrained by strong US production and high inventory levels, which have persisted due to milder than expected seasonal weather. While recent data from the EIA suggests that some inventory drawdowns could support moderate price increases, this effect may be limited due to continued flat production and only modest demand growth. Funds like BOIL and KOLD, which leverage price movements in natural gas, remain highly volatile. BOIL could see short-term gains in colder periods, while KOLD may benefit if prices stay suppressed. UNG, a less leveraged ETF, aligns closely with natural gas spot prices and may offer a steady alternative for investors expecting long-term price stability. Welcome folks, welcome back to another update for natural gas and the respective ETFs. Before we go any further, make sure you hit that like and subscribe button to support the channel. So first we look at natural gas and the weekly, monthly and daily trends. On the monthly, first off, you can see there it's still above its moving averages on the CCI 150, and it's just sticking its nose above that moving average range on the price chart as well. So bullish movement at the moment on the monthly. On the weekly, it's been bullish now since mid-September, early September, and it now is in this little consolidation range at the moment, but it's still bullish on the weekly. And on the daily, I've drawn here a resistance line, and it's actually touched this minor resistance at 30.96 twice, and it looks like it's heading towards that as well. But I've got a higher key resistance up here at 31.94. There's no other resistance at the moment, so it may well come close to this minor resistance at the least. Now you'll notice here we also gapped up over the weekend, and that's looking quite strong at the moment for natural gas. But we'll keep an eye on the CCI. If that still remains above, we'll keep it bullish for the coming days possibly. Now if we go to the intraday chart, you'll see it here more clearly, the gap up. Now we weren't, according to our strategy, you wouldn't have gone long at this point because we do go long only when the daily is long, and that happened on Sunday according to the time here. So you would have been, according to this, unless you held it back here, you went long back during that period in those hours and you didn't sell it off or you didn't stop it out, then you would have gapped up. Now if you do hold it at the moment, you're probably wise to take your profits because the CCI has now hit that moving average range, which is one of our closeout position signals. So it may well come back in the near term. If it breaks above that moving average, then we'll go long again. Next, look at BOIL. On the monthly, it's still very strongly bearish, below its moving averages. There's no CCI for the monthly. On the weekly, we do have this bullish divergence. You can see the lows on the CCI rising as opposed to the lower lows on the price. It hasn't actually made any key move above that moving average range on the weekly. So I'd like to see that break a lot higher to be more confident and to see this bullish divergence work out. And on the daily, a couple of things happening here. I've got this support resistance up here, or these resistance lines up here. Now you'll notice here we've got a very long-term, and I don't like drawing too many long-term divergence, but we've got a very long-term divergence versus the CCI. Alternatively, I like to take it a bit more closer. Now let me just remove that to make it easier to read. But if we drew a divergence in a closer short-term period, you'll even notice that that's almost a double bottom on the CCI versus lower lows on the price. So that's even a divergence there. Even if we take it back to this period, that's still higher lows versus lower lows. And again, even going back to this period, that's almost like a very slightly, that is higher lows on the CCI versus lower lows on the price. So it doesn't matter which way you take it on the daily there, we've got a bullish divergence and we may see a bounce in the coming days possibly on BOIL. Now if we go to the intraday chart, again, we permanently take short trades at the moment, even though, well actually no, we don't take any trades because the CCI is showing a neutral positioning. If that broke below the moving average band, we'll take a short trades only. Or if you're feeling adventurous, you could take a short, but again, I'd wait for this to break to the downside and be able to take more short trades that way. But at the moment, hold off. Now, if you're in the short position already, you may want to wait till it touches that moving average band and close out your position if you're already in profit. Otherwise, as I said, don't enter the trade until you see this break a lot lower. So for KOLD on the monthly, it's above its moving average band, but there's no CCI for it, so I would call that a neutral, if not a bullish trend. On the weekly, we did have a very narrow bullish divergence there versus lower lows on the price, and the price has actually bounced from there, and it's still rising quite relatively strongly above its moving average on the CCI, but also the price. And on the daily, it's actually it's actually still above its moving averages on the CCI, and also above the moving averages, coming close to this key resistance at 85.10. It's already broken through this minor resistance at 78.30, and it looks like it's weakening as it approaches this key resistance up here. So just be careful about going long. I'd like to see it break through that resistance and go much higher to be able to be more bullish on it. But at the moment, you can see there the CCI is weakening, and we may actually see it touch this resistance and then pull back. If we go to the intraday chart, again taking long trades only during this period, that's been consolidating in that range. As I said, it's now approaching this resistance, so just be careful. I probably wouldn't be entering it at the moment, again, until we see this resistance be breached. The UNG, that's actually still falling on the monthly, well below its moving average band. It's bearish also on the CCI 150, a very narrow band of moving averages, so still bearish on the monthly. Somewhat neutral on the CCI versus, you can see there it's a bullish divergence on the CCI versus lower lows on the price. It hasn't really dropped a lot further since our last update. In fact, I'll just take it to that point. Fallen very slightly since our last update, but we've still got a bullish divergence there. But again, we need to see it break higher than that moving average band to be bullish. At the moment, it's still very bearish on the price. And on the daily, it's actually hovering around that support we drew some time ago at 12.57. It already broke through that minor support at 12.96, and you can see there the CCI has been bearish, with the exception of that little false break there. It's been bearish and still bearish on the daily. So don't go long. If anything, I'd like to see this break a lot lower than this support to be more short positionings. On the intraday, again predominantly short. You could actually enter, but again be careful. The CCI is pulling back towards that moving average range. I'd like to see it break this previous low to go short. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.